Bharath is a strategic finance consultant with Accordion Partners, the go-to partner to the private equity community. Accordion focuses on providing services to the office of the CFO. Additionally, Bharath provides ESG data strategy, ESG-driven investment analysis, and value creation consulting services to private equity and hedge fund investors. In PE, he has advised sponsors and their portfolio companies on a range of ESG challenges, from assessment on and reporting frameworks to data collection, aggregation, and analysis tools, as well as vendor selection. Welcome, Bharath Iyengar. Do I pronounce your name correctly?
Yeah, that's good enough. There is no one pronunciation. So.
Got it. I met you last time, like 4 months ago, I think. We were at the desert, at the desert in Nevada at that time, and circumstances were quite different. Now you're in Texas, right?
Correct. I'm in Austin, Texas.
How do you feel compared to that time? How's your state of mind developed in 4 months?
When I'm in the desert, I usually put my regular mind in a state of suspension.
What do you mean?
I try to not think about whatever was bothering me before, because one of the most difficult things to do from my perspective, from a mental thought perspective, is to break continuity in thought. Every moment becomes a function of the moment before. And so that means you're a prisoner of the moment that came just before in your mind. So if every thought can only begin from the thought that came before it, there isn't any breaking of the cycle. So when I'm on playa in the desert, one of the things I try to do, I have to work on it, it's not easy, is to suspend the state of mind I came in with and to let my mind be shaped by the environment I'm in. And that also allows for better connections. It also allows me to be more honest to who I am at my core when I talk to people, rather than a prisoner of the previous moment and any baggage that I'm bringing with me from the week before, or whatever is happening at work or personal life. So it also allows me to inspect choices and decisions and what's presented for me in a more neutral way without any bias. So these are all my personal biases that I'm trying to fight. So that's why suspension of the state of mind.
Don't we all usually bring some sort of bias mixed with the previous thought in every situation? As in, I might have an idea about you. I might have some theory who you are and what you do already in my mind when I meet you. But then I meet you and you bring something new to the table. So the previous idea what I had gets mixed with this, whatever you bring to the table, and that's what creates the conversation.
It's true. It's very true. In my case, and I'm processing a lot of feedback I've received over the years. In my case, one of the number one things is that professionally, I'm asked to solve problems. And professionally, majority of the times, if I'm in a room with people, I'm expected to have answers. So that means I'm always thinking of the answer. I'm always thinking how I should react to where I am, instead of truly absorbing, which means it affects my listening skills, how well I listen. And I have to listen well to solve problems. But at the same time, my listening skills take a beating in my regular life. So, and my natural tendency is not to be a good listener. And that's one of the tendencies I'm fighting. And the other thing is, I feel people are more a function of circumstance today than they are of choice. Most people in real life that leads to lots of unhappiness and unfulfilled hopes and dreams for them. But it does mean that people, when you try to assess them, and try to gauge who they are based on who they have become due to circumstance, we don't get a true measure of the person within. And my leap of faith when I'm in the desert is I'm hoping the other person has also left the circumstantial person behind and is trying to be who they really are, who they want to be. Because the desert allows you to be that. The playa allows you to be that. So I'm trying to cast all of that away and see who is there. And for that, I have to cast a lot of who I am away outside and all the baggage. So I'm not saying it's a perfect situation. It's a work in progress. It's something I constantly have to fight. And but you make great connections. The number one reason I go to the playa is for conversation and connection. And so I get to do that. I've been able to get better at it. Some years are better than others, but it has been, very good so far. So I've kept at it.
Got it. You say people these days are creation of their circumstances. Are you comparing it to what are you comparing it to? Was it different 10 years ago or 50 years ago?
Well, I think it's different earlier in life you go. The younger the people, the less circumstance has had an impact on their choices. So if you take kids, they don't really get to make many choices. Their parents make choices for them. But in terms of their own choices that they get to make, to the extent that they get to make them, they're very pure. They're truly their own choices. I want a fire truck, or I want to dress as a cowboy for Halloween, whatever it is, right? It's not based on, what should I wear so that blah, 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 other things happen in my life. The older we get, it's not an illusion of choice. I don't believe in that way, but we get down one path. And when you're on a certain path, the universe of choices gets limited. And it's up to circumstance. Yes, I would like to go golfing, but I have XYZ to do. So I have to do XYZ. I can't go golfing. So it's not just about leisure. It's also about professional choices. It's also about life choices that we make that are circumstantial. So as people get older, I think the circumstantial choices start building on top of each other. So optionality, if you think of an option tree, like, or interactive story of a sort, you make choices. Now you're down one path. The first choice you made, the other option, the first choice is made is no longer available to you unless you fully disrupt your life. Now, I could be a fireman or a banker. I became a banker if at the age of 35, I decide I want to be a fireman. I potentially can. I'm still physically able. I can. At the age of 45, you're probably not, because you're not physically going to pass the requirements you need to pass to do it. Plus, the expectations on you financially to support a family and things like that may be not feasible as a fireman. It depends on where you are in which country and all those things, but just an example. So when I meet people farther and farther in life who in the real world, in the default world, are a function of the choices they made and the circumstances around those choices that led them to those choices, the more they have, more distance they have to get back to who they truly are, oftentimes. Not all the time, but oftentimes. The distance is usually the least with artists, with true creators, because they have always been creative. And so that choice with artists and creators is always, that gap is smaller. There is some circumstantial impact, of course, but it's not the same with other professionals, other people. And you'll see, that's my take. When I say people have gone down that path, it's if you meet, when I see a 20-year-old or a 25-year-old, they complain about, oh no, I completely missed out. My answer was, no, yeah, but you can do whatever you want still. But when I see a 40-year-old, I can't truly say that because they can't do whatever they want. You know? To an extent, they can, but they can't truly do it. So that is what I meant there.
Got it, understand. What external circumstances made you to take the path you took by becoming a impact investment consultant, work with ESG?
So it was many different things, but number one was just I initially tried to be the investor. So when I first came out of graduate school, where I had done a lot of work on what was wrong with the investment system, how investments were made, and how we looked at the return on investments. My first reaction was, well, I should raise money and I should make investments the right way. And that was my first effort. And I got out of graduate school. I spent about 8 months trying to raise money. And I didn't succeed. I wasn't successful because this was in 2010, 2011, impact investing wasn't a thing outside of philanthropy, in terms of foundations and stuff like that, doing their core work. And that is work that they wanted to do. The whole impact side of things was not as mainstream. And the approach that I had to execute that goal didn't get traction. We were not able to, me and two of my classmates, two of my friends, we were not able to raise, they're also burners, by the way, coincidentally. It's not, and from before we met, coincidentally, we're all burners. We were not able to raise enough capital to make it viable in a practical sense, to meet the needs at the same time to mitigate risk. So then the question became, why is that a problem? And so my first reaction was just a lot of frustration. But then when I thought about it, I realized that first I need to understand a little bit more about how currently investing works. And the biggest pool of investment capital is put in public investments, stocks and bonds and stuff like that. And so I went into public investment research. So I went to Wall Street as an investment bank and started working in that space to understand how are investment decisions made today. And it's not just the investment decision. What is the investor tasked to do? What is their mandate? How narrow is their mandate that they can't look at sustainability as something that they need to do? And there's a lot of noise. And at that time, there was a lot of, marketing around green products, what's called greenwashing. And there was also a lot of marketing around green investment products. So, and I looked at those things, I realized they weren't doing anything different. They were just marketing it different. So there wasn't any real impact. And so that took me to looking at, okay, how would I do this differently? What did I study in school? How would that be married to what's happening today? And that was the beginning. And I started this is around 2015, I started developing an investment research platform for the bank I work for that was based on sustainable returns as well as financial returns. Kind of a double bottom line instead of triple bottom line. It was a double bottom line approach to stock analysis at that time. And after about a year of work into that I did, my firm decided that they didn't want to do it. They, even though I had support from clients and things like that, just a very short-sighted move on their part, they decided not to do it. Had we actually launched the platform that I developed, we would have been the first formal Wall Street bank with a sustainable investment research platform on top of regular investment research or stock research platform. And that led me to think like there had to be a better way. First, of course, I had to clear my mind. So I went on a motorcycle trip. And then when I came back, some of my clients contacted me and asked me if I would be willing to do some work in the space for them as a freelance consultant. And that's how this whole consulting work started. And once that picked up and people were able to see real returns, both positive and negative, as in if you want to bet that a stock is worth more because they're more sustainable, or that a stock is worth less because they're not sustainable. Both were working. And so once that took off, I figured one of my interests was not to focus on public companies because they had to report every quarter. They're very short-term minded because the markets value the stock based on what they have done, every month, every quarter. So it's a very short-term minded philosophy. The companies are run that way. The executives are incentivized that way. And I didn't like that. So I made a decision to focus more on private equity, which has longer hold times, more patient capital, and is in general more transformative. If they have the mandate to transform the organization, it's not always clear how they are supposed to transform it. Just financially, they're supposed to create value. But then a lot of times doing the right thing sustainability-wise is also linked to long-term value. So very simple things like if you make sure your employees are safe, you are able to retain more employees. If you're able to retain more employees, you spend less time searching for people, your productivity goes up. Your attrition goes down, the amount of money you spend to hire new people also goes down. So it creates a better work environment, better attrition, better engagement, better productivity, better returns. And that leads to a better stewardship in the community. People see that, this company treats their people well, we're going to buy from this company. And there is long-term effects. And initially my work was around both developing playbooks. So if you look at the United Nations has Sustainable Development Goals, which came out almost 10 years ago, more than 10 years ago now. And they had 17 key areas of focus. So a lot of investors used to ask, okay, we see this, but we don't know how to operationalize this. It says we need to end global hunger. I make, whatever, automotive parts. How can I end global hunger if I make automotive parts? I don't know what the correlation is, but there is a correlation. And the correlation is in paying fair wages, treating your employees better. And wherever you're in a community where you're operating, treating the community as if you're part of the community in a integrative sense versus an extractive sense. So let me see what I can get out of this community instead of giving it to the community. And these things also make it the business itself more sustainable, but also make the business less volatile. You have lower volatility in your business. You're able to manage your variables better. So it leads to better outcomes for whoever is looking for value in the business. Another way is to share in the ownership. Can you take, this was an example of a high profile, very cutthroat private equity firm, one of the top 4 firms in the world out of New York, owning or buying a coal mine, which, out of bankruptcy. Now, you're like, hey, from an environmental sustainability perspective, this is good. But what they did was they focused not on the coal that's used for energy or things like that, but instead focused on what's called met coal, which is metallurgical coal used to manufacture steel. You need a certain quality of coal to manufacture steel, which is highly renewable. So the focus on that particular part of the business made the business more sustainable. But at the same time, what they did was they took all the employees and put them in a union, helped them create a union, and then shared the ownership of the company with the union so that if the company did well, the union did well. The union did well, the company did well, right? So combining those things was a key to, getting value for everyone. So how do you create value? So one of the key problems, if you follow, I don't know that you don't follow the coal industry in the U.S., but one of the big issue is strikes, labor strikes. So people go on strike, productivity drops. Now you have a shock. You have agreements with people who buy from you. People who buy coal need coal every so many days. They don't buy once a year. And so if they suddenly can't get the coal they need, now you're in violation of a supply agreement. You lose money. So labor strikes and labor unrest is very unhealthy for that market. So sharing in the ownership of the asset, of the business with the employees, even though they didn't put any money in. Right? They're going to put their labor in, they're going to put their sweat into it. Doing that, improving the safety in the mine, investing in safer access, more resources, better training for the employees, meant that they didn't have any strikes in the time they owned the business. They were able to create a lot of value that was shared with the employees. So the employees saw that their work got them not just a paycheck, but also some long-term ownership in a business that can pay them for generations. And overall, the health and safety went better, which meant that your production was stable, which means your clients didn't have to worry about, will this production suddenly disappear or stop for any reason? Can they depend on? So that means you got better deal, better pricing. So everybody benefited from that. So this is an example in, again, patient capital. Can't be done when you're expected to produce results every quarter, but when there is time to be patient, hey, invest 2 years in improving facilities, invest 18 months in putting better safety programs in place, and take 3 years to develop a union profit sharing plan and an ownership sharing plan. And so when you look at it over 3-4 years, you see a business that is a strong part of the community. It's creating value and wealth that's distributed across not just the financial owners of the business, but also the people who actually work in the business. And the people who work feel safer, feel like they're doing something that's working long term. And if you zoom out, you see that this is not something that is being used for, from an unsustainable perspective, but it's being used to produce steel, which is a highly renewable resource and which is in high demand. Rather use steel than plastic. So in that sense, it makes sense to protect and grow this business. And so they took a business that was in bankruptcy, and all those thousands of people had lost their jobs, to bringing it back to business, rehiring all those people, giving them a share in the company, and making that worth something. So just an example. And so this was something that I got involved in. And if you think about purely the United Nations principles or UNPRI principles of responsible investing, it's tough to connect the dots. But you have to think about what is the right thing to do. Just fundamentally, forget frameworks and guidance and other various bodies around the world, but just think what is the right thing to do? How would we do it? And then once you are able to operationalize that, then you can always figure out, okay, what kind of benefits according to the various guidance organizations does this provide? So the key is to not get lost in rules of here are rules on how to create value and sustainability. Just think about what is intuitively the right thing to do and follow that, and then everything else will fall into place.
I see, and that field must change constantly as well when the world changes. And what is the right thing to do? People get more and more into that.
Well, there are many issues, right? But the number one thing is the right thing to do is not the same from one point in time to another. What was the right thing to do 50 years ago is no longer the right thing to do, especially from a social sense. From a physical sense, it might be more stable, but from a social context, like what was the right thing to do 50 years ago? It's not the same. So
and a cultural context.
Cultural context, exactly. So 5 years ago, maybe 10 years ago, you hold the door open for someone. Now they go, I can open my own door. You don't need to open my door. Never know what it is, right? But we try to do our best. And so the more important thing is transparency. Can you be transparent about what you're doing? And can you explain why you're doing what you're doing? That is a bigger thing. And especially in private capital, private investing, everybody believes in having a secret sauce, which allows them to raise money that they get to invest. So if they share this, do they still have a secret sauce? Why would people invest with them if they share what they're doing? Because, and I think they should, because the difficulty is not in coming up with what is the right thing to do. The difficulty is actually doing it. It's very difficult to do things, right? Especially in these things, even just financial investors, getting them to agree on something is very difficult. but to have employees, community members, and financial investors, stockholders to all agree on something is very difficult. Consensus building is very difficult. Agreeing what is the price that we're willing to pay for better outcomes is very difficult. Who gets to pay what share of that price is even more difficult, close to impossible. So when we talk about like climate agreements, COP27, biodiversity COP15 that happened this year, and 196 countries meet, it's just, I'm surprised they're able to agree on anything, much less draft out frameworks for exact reductions and targets and deadlines. That's mind blowing. I know that most people don't, and most people don't have the bandwidth that can't do it. But if you actually go through the workings of how those agreements get hammered out, it's amazing. It's the amount of detail, at the same time, amount of effort put in by the delegates. So I think it's a nod to that. That's what gives me hope. If they can do it with such a large constituency, the whole planet, I think we should be able to do something for one company, for one business. And the other side of what I do is with Accordion is around data. So a lot of this talk about creating impact, understanding what to improve, how much to improve, from where to improve, what is the baseline, is all dependent on being able to see what's going on. Visibility into any organization, can be a business, nonprofit, government, doesn't matter. Visibility into what is going on is the biggest difficulty, biggest obstacle right now. And I talk about transparency. We can't have transparency without visibility. So first is somebody needs to know what's going on. Then they can share it with the world on what's going on. But somebody needs to know. And that is the problem that I tackle on a daily basis. And it's not always under sustainability. It's just somebody saying, I have no idea what's going on with my organization. I don't know what we make. I don't know how much it costs us to make it. My accountant tells me something, but my bank is telling me something else. How important are my employees? Are they doing the right things? Should they be doing different things? How many employees do I have? Am I losing a lot of people? Am I gaining a lot of people? Do I have a lot of churn, attrition? So all of these questions around the business require visibility and require data. And currently, there is, the last 10 years, pretty much every business has invested in systems. They have this, I have this software, it's on the cloud. I have this software, it's on my phone. So I have an app on my iPad. And all of these are doing things, but they don't talk to each other. And they don't always report to the managers, to the people running the business on what's going on. So that's most of my work, is getting different systems to talk to each other, synchronizing these systems to have a more comprehensive view of the organization, of the business, so the correct decisions can get made. It could be anything from, are we pricing our product correctly, to are we overworking our people, to do we have true diversity in our employees, to are our employees happy? That's actually a question very few people ask, but we within Accordion, we try to measure that all constantly of all our employees, and it's very difficult to measure. So there is a lot that goes into it, and I would say that these are both pieces. One is just understanding how to understand the data life cycle within any organization. What are the points? What are the actions that generate data? Where are those data points stored? How can we extract them? How can we combine them to make sure we understand the full view of what this organization is doing, how effectively it's doing it? Once you know that, then you can set targets. You can say, okay, we want to be more sustainable. We want to have better health records for our employees. We want to have, we want to have more mindfulness time for our employees. We want to make sure our employees take breaks. They use up their healthcare benefits, or our product. What is the carbon footprint, the energy footprint of our product? Where do we get our energy? Can we get our energy from better sources? Is this the best way to manufacture? Can we manufacture with a lower footprint? Do we always need to manufacture in this faraway country and ship everything? Should we manufacture locally? Should we manufacture locally to every market? Like all these questions, you can't answer them without knowing what you're doing today. And so these two things work together. And lastly, of course, once you have this kind of visibility and you have targets, then you can measure progress. Are you truly making progress towards your goals? And along that, you should also question yourself, are these goals still relevant? So it's an intellectually demanding exercise that will only be successful with transparency and honesty and the willingness to question things. And so it's tough to ask of a person, much less an organization. So but it's very rewarding to see it happen, and there is always something to learn. Every day there is something to learn. So it's important to take that time to step back and think about what did we accomplish today, or why are we spending time on this?
I understand. Becoming aware.
Yeah.
I'd like to go back a little bit to your circumstances before, since you told me before this interview that actually traveling is what opened your mind to become a consultant in impact investing, and it opened your mind to see the human condition. These are your words, and I'd like to hear what you mean by that.
Well, I'll say before travel, I would say I grew up in many countries. I grew up in India, Europe, here. So for me, one was being able to see how life is same and different across various parts of the world. And also how life has been same yet different over time. As we achieve development, as we achieve technological development, as we achieve quote unquote progress in terms of income, lifestyle, things like that. And travel today has reinforced that in many ways, which is that people around the world care about the same things. They don't care about very different things per se. They care about the same things that they want for their families, for themselves. They want the same sense of security. They want the same sense of fulfillment in terms of the core things that bring happiness to a person. Regardless of culture, geography, it's more or less the same. And if you put that against the human condition, as in how far from that state of happiness is an average person on an average day, and you look at it throughout, right? You can look at a war-torn war zone in Ukraine. There are moments of happiness even in that condition for people. Whereas somebody in Texas may think, how can anybody there be happy at all? But there are moments of happiness there. And that person in that war zone can look at somebody in Texas and think, this person should be happy all the time. They're not, right? And that's also true. And that's what I look at. And this is just my own thing. I have not read about this anywhere so far. If that is there, that'll be interesting. But from my perspective, it's just, what is happiness on an individual basis in the individual context, wherever they are in space and time, and how far is the average person from that state of happiness? Can they get that easily, or is it an impossible situation for them? And the idea is, if we nourish the environment, if we keep our environment healthy, if we keep our planet healthy, and then that's going to help people be in healthful states of mind and be able to be nourished and be rejuvenated by the environment they're in. And
what do you mean by a healthy environment?
By a healthy environment, I mean ecosystems that are able to regenerate themselves, that are able to nourish themselves. So if someone lives in a tropical area, tropical climate, tropical environment, and they have things that do, so think about island in Indonesia, in the archipelago of Indonesia, and say in Bali, and the island was self-sufficient before anybody got there. They used to fish for themselves. They got their own, seaweed. They had their own rice, their coconuts, and they had a self-sufficient system. But when we say, okay, that place is so nice. We want to be able to visit. People from around the world want to visit as tourists and enjoy that ecosystem. At the same time, that our little island should benefit from advances in technology, healthcare, medicine, and education, things like that. Is that an even exchange? Right. So, does the quality of life get better for the people on that island without sacrificing who they were supposed to be? So when I say ecosystem, is that ecosystem are we taking more out of that ecosystem of that island than we're putting back into it? Right. So is it diminishing the quality of the ecosystem? So if there were 100 different species of animals on that island, is today's situation making it untenable for half of those species to exist? Then now we have diminished that ecosystem, right? And the point was that the ecosystem as it was before was keeping those people happy. They were fine. And now that we've increased tourism, traffic, we are sending over iPhones to that place, and the iPhone's packaging has nowhere to go. And is that ecosystem still great? Is life truly better for those people? So how can we have improvement in quality of life without decrease in quality of the environment that people live in? Because people have evolved in the ecosystems that they live in. So how can we make that balance sustainable? And I'm boiling it down to something like that because it's a simpler thought experiment. But the real question is, in a larger sense, how does it work? And so overall, you can look at our oceans and things like overfishing and plastic in the oceans and microplastic in the ocean, all sorts of impacts we're having on the ocean. It's making it untenable. There is no way basically, instead of saying the ocean can't be the ocean forever, right? Now we have put a life on it. The ocean will, tuna will only be available for the next X number of years. These species are going to die off in Y number of years, right? And so now you've created an imbalanced system. And there is this day, right? Like we have the day every year by which the resources, if they're consumed. Sorry, I'm not saying this right. There is a day every year by which we have consumed more resources than the Earth can generate. Ideally, that day will be December 31st or even farther. Never come. But I think right now it's in July. By July, we have consumed more than the Earth can produce. So, as a species.
How's that measured? How's it measured? At which date of the year we surpass the resources of the planet?
I think it's a combination of various resources we consume that are renewable, but we don't allow the Earth to renew it. So it's energy, it's carbon. I think it's mostly carbon equivalents is how they calculate it. I can look it up. But it's basically saying, hey, the Earth can absorb this amount of carbon and carbon equivalents, and we produce more than that by this date. I don't think it truly considers biodiversity impacts and other things. But to say that you can take it on a global scale, you can take it at a local scale, and it has to work on both levels. And when I say I try to make it work both ways, and personally, I have been able to bring it down to one word. And that one word is opportunity, but it has many meanings. When I say that, I mean I want every human to have the opportunity to do whatever they want to do. It's not always good. So I was talking earlier about circumstances taking people away from who they truly are. If people truly had the opportunity to do what they really wanted without any penalty, then everybody will be doing exactly what they're supposed to do in life, and everybody will be happy, at least in terms of vocation, what they do in life. And so that's one thing. But opportunity can also be put to ecosystems, to individual species. I want the species to have the opportunity to survive. I want the ecosystem to have the opportunity to regenerate. Right? So when we do that, now that word has multiple meanings, but once you make that true in all the contexts and all the stakeholders in the world, then you truly have a sustainable system. That's my belief, and that's what I try to. When I want balance, and I want to close my eyes and think about how to approach something, that's how I try to gauge whether I'm doing things the right way. Is everybody involved getting the opportunity they deserve or they need? So,
got it. As I understood, this ESG stands for environmental, social, and governance investing. How long time ago was this term coined? Like, when did you hear about it first time?
I think in the last 15 years, 15, 20 years. The term itself might have been a little older, but I think the acronym became very popular once it became the investment philosophy du jour, if you will. So it caught flavor. And here's the sad part about it. So the three pillars ESG are fairly intuitive. Environment, of course, we want to do it. Social, impact on the impact that businesses have on society, on its people, and governance is around how do you make decisions? How does the organization make decisions? Is there fair representation in how decisions are made, and things like that? The problem that I see is ESG has grown very fast. People have realized, okay, this is how we need to make investment decisions, but also there has been a race to raise as much capital as possible to manage by various investment managers using the ESG, I should say, moniker, using the ESG as a qualifier. But we do not really have the two things I talked about before, the visibility of data and the transparency to truly put the philosophy of ESG into play. It's not very different from saying we need to get rid of oil, but we don't have anything else to take its place in a sustainable way, so we can't get rid of oil right now. And we should, because it creates other issues, social injustice issues. So, for example, if you say, you know what, we need to not have any new oil production, then the price of oil goes up, and people who are poor are going to be hit with inflation, are going to be priced out of various things. So when you think about opportunity, it comes back again. Do those people have the same opportunity other people have when the price of some energy goes up? That doesn't mean we don't stop looking for better solutions, a better source of energy that is more sustainable and that can really power the human race in the future. But if you bring that back to ESG, it's the same thing. Is where people are saying, "Oh, we need to invest considering the environmental, social, and governance impact of businesses and how they run." But to truly manage investments and to manage businesses using that philosophy, you need a level of visibility and a level of transparency that is just not there yet. So there's a lot of money going into that, and there's a lot of greenwashing in marketing and in lingo and buzzwords. So what happens is now if you say, okay, let's look at ESG funds last year and how well they performed, you'll see that they didn't perform that much better than anything else. That's because a lot of funds that are calling themselves ESG are not truly ESG. Now, I want to give another perspective on ESG for those listening, is that, so ESG is not, I wouldn't call it, something that's purely environmentally or sustainability driven. It's simply risk management. If you're looking from a financial perspective or an investment perspective, it's just risk management. So what are you saying when you're managing ESG risks? You're saying, hey, damage to the environment could be a problem to the business that I'm investing in. Damage to society, whether it's its own employees or the communities where the business operates, is bad. It can affect the value of my investment. And if the business is not well governed, well managed, it could affect my investment. Now, I want to give quick examples. So you invest $1,000 in a business, you buy stock, and that business is caught polluting the waters of the lake near which it operates. the community where it operates, the state, the jurisdiction, the government is going to put a huge fine on it, your $1,000 investment is going to go down in value because that damage has to be paid somewhere, has to be rectified by the polluter, which is the company you invested in. Take the second component, social. If the company you're investing in does something that hurts the community it works in or its employees, they sue the company, they're going to win a judgment. That money is going to come out of the company you've invested in. The $1,000 you put in is going to go down in value. Governance. Let's say the company doesn't have a balanced management team that has a lot of insiders in the board, so there is not true oversight of the management and what decisions they're making. So that is fraud or something else. They're caught. Once again, the value of your investment goes down. The $1,000 you put in goes down in value. So if you just think about it as an investor, everything that's within ESG is just risk management. It's just managing the risk as an investor. You're just saying, I need to see more information. I want better visibility and transparency. So visibility is knowing what's happening. Transparency is sharing that knowledge with people who are investing in the business. So better visibility, better transparency means now you truly know what's going on. So you can know as an investor, how is this organization managing the risks facing its business model? So one of the sayings is, there are black swan events. A very good example is the 2008 credit crisis that wiped out a lot of value across the world. So if you look at that crisis and people said, oh, I did not see this coming. Well, it was a black swan event. Black swan is an unexpected event that happens, right? Well, if you shed no light on it, all swans are black in the dark, right? So if you think about, I didn't see that coming. Well, you didn't turn the light on. Of course, you didn't see it coming. If you had the light on and you're looking at the risks that you're facing, you would have seen it coming. You would have protected yourself from that risk. So a lot of poor practices or malpractices that happened that led to the credit crisis in 2008 could have been avoided if we had been looking at how businesses were operating in that space in that time. So same goes for this. So if you say, let's take a FTX, the crypto exchange that just collapsed, as an example. People didn't know how they were operating. So there wasn't good governance. There wasn't good transparency. So if they had better visibility into their business and if they had better transparency and shared that visibility with investors, people would have known that there was a problem. They would have questioned it. They would have stopped the malpractice, things like that. But you didn't know. Nobody knew. They wouldn't share. So in darkness, the risk can't be managed, right? And so that is a fundamental philosophy. Anybody who looks at ESG and thinks it's a sustainability thing or a tree hugger thing or a hippie thing is actually very mistaken. And a lot of ESG has been happening over a long period of time, just not being called that. It's just been called risk management. And it has been happening for many, many decades before ESG became a thing. It's just now that it's being formalized, but also demanded of a lot of investment vehicles or investors. And we want you to consider these risks. We want you to quantify it. And we want you to tell us how you're managing it, how you're getting better at it. And that's where a lot of my work comes in.
You said a lot of greenwashing, especially in the past, has happened in the field of investing, and it still happens. Can you give some examples of how that happens in practice, and don't people already see that?
A professor once told me the best way to sell a bottle of wine for $20 is to put the same wine in 3 bottles. Mark one $10, mark one $30, and mark one $20, and the $20 will sell because people will go with the average, the median. So greenwashing 10, 15 years ago started as, hey, we have a green detergent. because it's made from better chemicals. It's better for the environment, right? And so you should buy it, so you should pay a premium, yada, yada, yada. Without quantifying how is it better, how are the chemicals in this product less impactful to the environment than anything else before, what exactly have you done? In fact, the argument was it was better for the environment to just use less detergent that you had before than a new one. So, for example, Procter and Gamble used to say, I'm just going to use this measure, their detergent scoop used to be like this big. You only needed to use this much for a wash. It was even marked inside that you only needed to use this much, but they will give you a big one, so you use all of it, right? And their CEO admitted to this. And so the point is that sustainability was not, it wasn't clear how something that was called sustainable was actually better. How is it better? Why should you do it? Now, fast forward to today, and you say ESG, greenwashing, what's happening? Think of loans, bond market, the loan market. And it used to be, hey, we have infrastructure debt. That's something. We have debt in general. We have government debt. We have U.S. government debt, foreign government debt, European debt. We have company debt, corporate debt, and we have infrastructure debt. These were the various categories. There are other categories, but for now, we'll just think about these things. And the point was, you know what? We also have in our debt portfolio that we sell to investors, we provide loans to foreign infrastructure projects. It could be a bridge in Malaysia. It could be a dam in, Egypt, what have you. And these were riskier loans because you're giving loans to infrastructure projects in developing countries, underdeveloped countries, so it's risky. So you had to provide a higher rate of return to investors to get them. Now you take that same project that you're providing debt to and you say, it's actually an impact project because this bridge is providing access to or connectivity between these two islands in Malaysia that otherwise have not been able to be connected. So because of that, the people in each of these islands have access to more economic opportunity, more educational opportunity, and things like that. So this is an impact project. Because it's an impact project, it's an ESG investment. Because of that, we are going to give you less return to an investor. Okay? But the risk in the investment in this bridge, so to speak, never changed. So, and there was nothing done to mitigate it either, right? So things you can do to mitigate risk. For example, I would say, if you said, hey, because this is an ESG investment, we're going to first go and research whether this bridge is even necessary. Or are people swimming from one island to the other just fine? Or taking the boats? They don't need a bridge. Right? If you're in the business of giving money to build bridges, you are not going to make that check. So now you've not done your risk assessment. So you're assuming a need when there may not be any need. Second, do you know if the bridges can be built safely? Or will that bridge be subject to high waves and it's going to break in 10 years? Or require high level of maintenance? Do you know that there is actually enough people in these islands to need a bridge? If one island has 10 people, other has 15, and you build $100 million bridge, doesn't make any sense. Third, is your bridge going to impact ecosystems negatively? Or are there fish in the ocean that are going to be impacted? Is the land where you develop the roadway on the other side have ecosystems that you're going to destroy to build this bridge? So these assessments, if they are done and then qualify the project, then it goes into an ESG investment fund. Then that is a true ESG investment. But what's happening is a lot of investment firms are doing what they always did, but calling it ESG in their marketing. On the other side, there are investors who have to invest in ESG because that's what their mandate is, and they don't see any options, so they put their money in this thing. So there is money that's supposed to be an ESG investment in a regular investment. And now if you say, hey, if I want to measure the impact of this ESG investment, you'll see no difference from a regular investment because it was never a new investment. It's the same thing. So that is greenwashing in impact investing today. There is a lot of it. There's a lot of it all over the place. And there is greenwashing in infrastructure investments, in carbon credits, in forestry. All of impact has greenwashing. And the only way around it is the same two things I said: visibility and transparency. So now you see why I do what I do, to improve visibility and transparency, because I feel like there are a lot of people, rational people, who can make the right choice if given the information, if given the visibility and the transparency into businesses, organizations, and impact. So I have taken it upon myself as much as possible to create that visibility and transparency so that others who have to make the decision can make the decision. So that's me connecting the dots.
Yeah, I understand. That sounds really good. I wanted to talk to you about quickly. We're almost running out of time, but I want to ask your opinion about the future. So I actually asked you the same question before at the desert once, but I want to ask it again. Let's pretend it's the year 2092 and we teleport there right now. It's a Bharath utopia. It's 70 years in the future. Things have gone well, optimally, as you would have choose them to go. How does it look like? How are people treating each other? How are the cities? How are the communities? How's the humanity?
I don't remember what I told you before. So this is going to be a new take. I don't remember what I said, but I think it goes back to the things I mentioned, which is opportunity first. So number one would be there is no question that everybody and every organism, every system on the planet has equal opportunity. So we have equilibrium between our impact on the systems around us, and ecosystems and physical systems, social systems around us, and their impact on us. So there is equilibrium there. So because there is equilibrium there, I think we don't have the strain of how we are impacting the environment, how unsustainable our actions are, the worry that, sea levels are rising, climate's changing dramatically, all the stress put on the human population because of that is gone. So now we can truly be who we are. Second, of course, I'm hoping technology allows us to get to a point where, as a society, a lot of our employment today is just through what we need to do as a species to survive. If technology allows us to automate a lot of that, we as a species can survive with less effort. If we are able to survive with less effort, my real hope is that extra time, energy available to each and every one of us is devoted to creativity. That's my hope. So I'm hoping in the future I get to a place where we have in harmony and equilibrium with the systems around us, the environment around us, and that technology has helped us, to have more leisure time, more creative time. And we are using that creative time to express ourselves because we are less a function of circumstance and more a function of choices we made because we all had the opportunity. So now that's a very metaphysical answer. It's not an answer of like how things will look. But I think the way I expect things to look is there should be more individual expression, more people doing what they want to do because that's who they are. There is actually a thought experiment on this. Again, fiction. The example is Lord of the Rings. In Lord of the Rings, there is one version of elves who, again, they're very powerful, advanced, who have not had to fight wars for a long period of time. I think they are the Wood Elves. And each one of them takes on a different shape. They don't look the same. Each one looks different in terms of whichever part of nature they wanna look like, and they wanna mimic, and they wanna be a part of. And so, and that individual expression is what I'm coming back to. If you look in movies, whenever you see people from the future, they're all dressed the same. They're all wearing this one outfit. I actually think it'll be the opposite. I think if people truly have the opportunity to be who they are and can live in harmony with nature, they won't have the pressure of nature at the same time with the opportunity to be who they want to be, and living life isn't so taxing that they have to make decisions they don't otherwise make just to survive. Then I expect people to be very different. I expect everybody to look different from everybody else around them. And that'll be amazing to watch, amazing to see. I expect every day to be like the playa. I expect every place to be like the playa.
I see. That sounds beautiful. Let's hope we get there. Let's work on it.
You invent the time machine. Go verify.
I'm working on it. All right, Bharath. Thank you so much for the opportunity to talk to you again.
My pleasure.
And I wish all the best in Texas for the rest of the day.
Thank you.